Hello and welcome to the weekly Delphian meeting. Thank you for tuning in. We'll have a abbreviated session today. Joe is out on vacation, so just me. So I'll go through the market update and update the earnings trades. So let's get started here. Uh, okay, so indices, we got SPX, Russell, NDX, everything pretty much holding state one, been there a long time. All of them, most of them. Dow flipped to two real quick, but came back. And then you look at sectors also. So everything now is in state one except for XLV. That one's been hit pretty hard, since the election. Um, but everything else, we had materials flip in the last week. So that was kind of like the last one besides healthcare. So everything else is in state one. And, green pie wise, you look 59 up to 64 week over week change. We're well above our 45% in state ones. I mean, we get up here, it's half the symbols are in state one. So, 2000 over 2000 of the symbols are in state one right now. Um, so definitely, in an overbought kind of condition, but we're just kind of grinding higher. And state eights have kind of dipped a little bit, but kind of holding around that 20 range, and we've talked about that a lot. So let's look at the market pulse here. So you can see state ones, last week we were at 48, just kind of a little bit higher here, 2% higher. Anything over 45 is kind of, technically overbought for us, but, you can see high, we get up 51, 53, uh, 52 there, 50. So even back here, like 49 kind of range. So, you know, um, just kind of grinding higher. You can see the eights also dropped 22 to 19. So small drops, kind of incremental moves, but it's been um, here's pretty much the election. So this is pretty much just big pop, minor, retreat here over a couple days and then just grinds higher. So, hitting all-time highs and most of the indices and if you look, we look here at twos, just not much left there to go into ones. We get 6% back here, four, three, five, six. So, um, just kind of not much else to go into ones. As far as eights, those will go to seven. So, getting a little bigger in sevens. I mean, what you ideally want is those sevens to go into five and, up to ones. So that's how we'd get more ones than, this 6% that we have right now in state two. So, but, obviously constructive. We're seasonally in a, good time frame, November, December, typically markets do well. And, post-election too. So it's kind of, just grinding higher, hitting new all-time highs. So nothing different here, 1 years. So, we got big movement here, but we're still, getting nice all-time highs on, and pretty much nothing on the lows. You look at those, it's like 40, 50, 40, 30. So really it's like dead. Um, Even though, we have 20% pretty much in state eights, that's where new lows happen, but just nothing happening there and just, kind of grinding higher. All of these are pretty high, separated from each other, 20, 50, and 200s. So really just painting a pretty bullish picture, except for the fact that we're overbought. We can never tell how long this will last. And then just green pie wise, 64, it's not something extreme, kind of a normal, like run up, back here 70s, 75, way back here we get upper eight, mid 80s. So just kind of like a typical range that we're at, for, kind of these run ups, not anything drastic overall. So let's take a look at the kind of uh, key things we want to look at. SPX new all-time highs here. So that's 60, 53, 52, today 74. So just another all-time high, just making all-time highs. Um, Not much to glean from here other than, obviously want to stay above our target three. If we look at, you know, back here when we popped, we'd love to see that retest and hold. And then, from there, who knows how high it can go. Top range 6,200 off here. But this is ideal for getting above target three, come up, retest, and then go. So, that's obviously bullish overall and, making new all-time highs. Just another thing, bullish. And the other kind of key thing is just staying above that 20-day EMA. That's where most of these runs, the support is. You can see, back here when we were testing target three, the same day here, 15th through the 20th, pretty much same thing, 15th to the 20th, testing the 20-day, those coincided right there and just, that held and, we're off and running. So, uh, just staying above that, uh, that range, for the 20-day and, the bottom of this range is 5,800. Let me pull it up. I'll just lay the lines real quick. So that's bottom of the range, top range up here, 6,200. So, the 50 days, that held back here, um, late October, early November. So, 20 and 50 are kind of our key things. 20 obviously first, but, you know, um, that's two things you got there. And right below that support 5,800. So, it's going well, grind higher, so that's it for SPX. Let's look at Russell. So this was the all-time high here, 2466, having a little problems. Haven't touched that. As of today, we're up 2422. So, slightly up. But, that's your all-time high. So, upside resistance is going to be right there, that 2466. And, back in time, the previous one was 2461. So same kind of range there that we want to keep our eye on. Obviously target three for support. Same with two. See, two back here was actually where it, turned around on the 19th. This took off. So see if we can close above, the all-time highs. But let's look at the actual chart here. So the all right, there we go. 23 is bottom range, top range 25. You also have, every 100 is also, support and resistance. So staying above 2,400, short term is good. Closing above, all-time highs would be very good. And really, other than that, you're just looking at, staying above support, the 50 days, the key one for the Russell, and that's pretty much bottom of the range, 2303, and, for the 50-day and, 2,300. So that area is very very important. That'll be below target three and above target two there. So, so you have kind of key levels you can, kind of look at overall for Russell. Yeah, that's one other one I want to point out was just keep an eye on is the dollar. So this one, hit I think all-time high on the 22nd or close to actually, no, it's back here, September 2022. So those all-time highs, but we've had a pretty strong run up. You can see here since end of September. Obviously these aren't like big, like Nvidia type moves, but for the dollar, it's important, because the stronger the dollar, the more it's kind of a headwind for markets, especially internationally exposed companies that do a lot of business overseas. A lot of small caps that are internally U.S. That it's actually a good thing, but can be a headwind. So just want to keep an eye on it. Especially if we close above, get above again three and can make a run above that. So just kind of want to keep your eye on that as a possible headwind. The other one is the 10-year. So that had a nice drop. We kind of called that. It's like looking like, near term top. All right, Yahoo, come on. There we go. So we were talking back here. It's kind of looking like near term top, this 4-4 kind of range and a nice drop. We'll see overall if we're, getting, lower lows. We have been getting higher highs. So, lower lows the past two. So, we'll see if, the lower, if this, as long as it stays below 4 or 5, I think we're good. But, the lower the better, obviously, for equities, especially Russell overall, that are exposed to, credit risk a lot more than, the larger companies. So that's been a good development. Headwind, tailwind for markets getting, the Fed, the 10-year below, well below 4 or 5. So in the threes be even better. So transition to that, Fed meeting. So have a little movement as far as the next one. That's 2 weeks out. So we'll do that. That'll be the same when we push out next quarter's earnings. So a little stronger for a cut there. Same thing with January. Just planning for one cut right now. Between December and January, and then off to March, another cut kind of factored in. So that'll be dependent on data driven, and we do have unemployment coming out Friday. So a lot of those previous reports have been revised down. So this could be interesting. I think I was looking at it earlier. Calendar. Thursday, Friday. So yeah, previous minus. Um, so forecast 100 to 200 kind of range. So I didn't see any other kind of major things other than this ICE, PMI type stuff that recently came out. Nothing big out of out of the expected range. So the other thing I did want to pull up, found an interesting chart. U.S. stocks versus European stocks. And this goes back to this from Bank of America research. And going back to 1950, you can see, uh, you know, the relative value over this time period has been very consistent, but pretty much going back here 20 16 just gone, exponential as far, I don't know if that's dollar strengthening or just the European economy just, not doing as well, but, it's something very interesting. So I want to pull that one out. I think there was one more. Yeah, this one. S&P trailing PE past 124 years. So here's like the previous tops, December 21 .com here, June 2021. Yeah, kind of little unexpected, but here's where we are currently. So little high in the trailing PE overall, but you can see back here even .com, we popped up. We were there for a while, dropped, kind of popped. So a little elevated overall, but yeah, just something I thought interesting to show up there. So, all right, I think it's it. Open up to questions, comments for you guys on the market.
Last chart, I was going to say if the melt up continues, it's just going to drive the peak on the last chart higher until, higher and
Right.
higher. So, so it looks like, feels like a melt up is going to continue to me.
Yeah, I saw it's interesting. I saw some like one of those market analysts. He was like calling he's like, oh, it'll top at like 600, 6,600 something. The S&P. That's what some one like Morgan's one of those guys, he had called, like the top of the near term market's gonna be 6,600 something. It's just like, okay. That'd be another 10% from here, but yeah,
Yeah,
it's interesting. That would pretty much line up, like right here in that same kind of range. But
yep. Yep.
I mean, most things are, pointing bullish as long as we hold those like support levels. Only thing really is, we're just overbought, you know. So,
Yeah, and as they say, markets can tend to can stay overbought for a longer period of time than you
oh
might
yeah,
think.
oh yeah,
So I kind of feel that's where we are. I don't know. I'm trying to think out in the future what could possibly stop that, and I had to think way out until like earnings in Q1 or two or something next year before we have any meaningful,
yeah. Well,
doubt thrown into what's going on. If you ask me,
yeah, I mean, earnings have been good, and like Joe's shown the forecast, like they're expected to get even better. So,
sure.
I'm not concerned so much earnings wise, just geopolitical and any kind of liquidity, like banking liquidity type thing. That's kind of the two things I would, be just mindful of.
Yeah, unless prices jump right after Christmas due to new tariffs or something like that, that'll even take a little
Oh
while
yeah, yeah,
before that filters down. And that like even if some of the Trump moves end up not being working out so well, we're not going to know that for a little while. So you
right,
know what's to
yeah,
stop the enthusiasm that exists?
yeah. Well, I mean, he,
I
I
guess
think he's
if
being a little
Taiwan got invaded by
preemptive.
China, that might do it. That's about the only political event thing that
Yeah,
I can see happening. That's would
I
be really, really, really bad.
Yeah, I would think he's just going hard at first, and you can always walk it back, you know.
Yeah.
So,
Hopefully,
yeah,
cooler minds will prevail. Cooler minds will
yeah,
prevail.
yeah, I agree. So, all
Thanks.
right. Thanks, Ed. Anyone else? All right.
I'm getting altitude sickness at these levels.
Yeah.
I'm just amazed at how strong this market has been.
I know. Well, I mean,
And
yeah, yeah,
other like you said, other than financial issues or geopolitical issues, next year looking even better. To me, I find it scary. It's like it seems like there's always something that comes out of the blue to knock the market back down, but to just keep going up like this, it's
Yeah, I mean, all those are like, just pullbacks and buying opportunities. I mean, it's a 1-2 sleep modeling market. So, until it
yeah,
isn't, and that'd be something structural, obviously, but earnings, like Joe said, are, propped to deliver, going forward, unless something happens. I guess inflation would be another thing.
yeah,
Price
yeah.
prices really, I wouldn't expect that in the short term, but medium term, keep an eye, definitely keeping an eye on it. But
We'll have to
uh,
see how the tariffs and the repercussions of that have what kind of effect that has.
yeah, I mean, until now, I mean, until what, late January, it's all talk, right? Until these
Right,
second,
right.
yeah. So that's a month and a half away. So, yeah. Anyway,
One comment I'd like to, well, there's not too many of us on here today, and so I'm going to jump in
yeah.
here. I was listening to the Salesforce conference call last night, and particularly to hear what they said about AI, because they're another big AI company, but they're not like in the limelight like Microsoft and Google and Meta and those guys who are all chasing this generative AI stuff.
Hmm.
And the approach that Salesforce, and their ticker is CRM for
Yeah.
customer resource management, right? That's
Yeah.
what they do. Salesforce, like the name says, is kind of where they're focusing on companies that are, trying to generate more sales with, more technology, less people, that kind of thing.
Yeah.
Would seem like a kind of a better fit than trying to sell personal assistance to every,
Hmm.
Tom, Dick, and U.S. citizen that has a account on Google and Facebook or whatever, you know.
Right.
And I didn't hear Benioff say anything about the capex versus returns. However, he did mention quite often how the returns are coming in for the way they're implementing their chatbots with X number of $1 million deals, et cetera. Record number of, we closed the record number of multi-million-dollar deals this last quarter, da, 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 da. So
Right.
they didn't give the breakout of CapEx versus return on that, but they did give a lot more, he did give a lot more, let's say, qualitative, not quantitative information compared to the other guys that are all chasing this generative AI stuff with a lot of the required training and all that to train out all the bad data. So I thought that was interesting. I think Kathy
Hmm.
Woods a couple of days ago said that, oh, the next big thing in AI is going to be software. Well, yay, Kathy. I mean, that's what AI is software. So I think, though, she was alluding to the kind of thing that I was just saying is what companies are going to, the companies that are going to use AI internally are going to be the ones that are going to benefit from AI more than Joe Q Public is,
Right.
in my opinion. And I think that's what she was saying when she mentioned that it's going to be software, not hardware, hardware companies. So that was
Hmm.
interesting. So I think the AI, there's still life to the AI trade, but maybe not in the generative AI part of the AI trade. Also, watching how that plays out, but it was a interesting development, recent development there. Uh,
Hmm.
the other news thing that I thought was really interesting and kind of made me quiver a little bit was when Pat Gelsinger retired or walked away from the CEO job at Intel. That happened Sunday. He
Hmm.
apparently had a disagreement with the board, and his point was to make the fabs the new area of business had to have the best fabs, but that
Right.
was dragging down earnings and capex going into the fabs, and Wall Street didn't like that, and investors didn't like that, and so now without that focus going on in Intel, I think Intel's could be in trouble. I don't know where they're going to go now. If they're not going to forge into fabs, best in class fabs, which is where Pat was trying to take them, I don't know where they're going to go. So that's an interesting development on the semiconductor
Well, they're
area.
not, isn't there talk Qualcomm's gonna buy them?
Well, that there's always something. Somebody will buy them, kind of thing coming out. If somebody
Yeah.
should buy them, it should be somebody like NVIDIA that's got flush with a whole bunch of cash. You'd think if NVIDIA made its own chips, it could have a better control on the pricing of what what they can sell and how
Or
they can
Apple, I
market
mean,
it.
you know.
But they're not. They're staying with.
Right.
I think even NVIDIA said they were thinking about going to ARM as maybe opposed to Taiwan Semiconductor. But
Hmm.
yeah, anyway, those are good, interesting story. I'll keep following
Yeah.
those stories as they go along.
Yeah, you're always up on the semis, Dave.
I try. I try. I try. But
Yeah.
behind in that phase, did you see Marvell took off last night
Right.
because
Yeah, I saw that. That's a big move.
they're a fabric maker on what they do is with their switches and their creating pathways to all these various different data locations that all these AI crunching data centers, where's the data? It's not always in the same place or it's in multiple places, and that's kind of what that company does.
Hmm.
Is fabric. I think I put that up on one of the other forums that I'm interested in. Is anybody investing in fabrics? And nobody knew. Nobody knew that a fabric was a memory array kind of networking thing. But those are the picks and shovels for you. So anyway, it was a pretty big move. It was outside the
Yeah.
in
Yeah,
sales.
big move.
Those were outside the market maker moves. That's for sure.
Oh yeah. 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 You see it's up like 24, almost 24%. Big move. So
Yeah.
that was actually one of our bullish pre-runners. Good segue. That was
Uh-huh.
bullish pre-runner hit its target there on the fourth, on the second. So yeah, hit our profit target. But yeah, if you would have held it through, I mean, yeah,
Well, yeah, but yeah,
yeah, yeah.
stick with the way this
It's
the
gambling.
it's
Yeah,
structured.
you
But
hold it through earnings, you're gambling. So, but yeah,
you
that
can maybe
you were in
sell
it.
put spreads in addition to the well, that's what it was. It was a put spread. So
Yeah,
okay, never mind.
yeah. It wouldn't even. I mean, if it would have been a $90 call, you would. Yeah, but we're doing spreads, so yeah. That's the we got in at 90 there. So, but yeah, that one closed out. Bulls pre-runner doing fine. Yeah, one loss. What else we got? Not much else. The none of these really. The bullish runners are kind of our stinker this quarter. So, two of those end up closing out. Car match, and then we got a couple open that are not doing well. So this one's kind of dragging. The bullish runners really, did well. Volrise doing great. I'll show you those. We had a non-mover AMAT, so that came back. Um, Not a great quarter overall, but this one came back and hit profit targets. So 2 out of 4, not what we look for there. Typically, that's one of our better ones, but not this quarter. So the only draggers are the bullish runners and non-mover. But we got bullish runners really killed it, and then the vol rise is just crushing it. We had 2 new ones on the 29th. Costco is up pretty good so far, and CN, and closed out. Let's see, AMBA. Yeah, so we have 2 minor losses, 5 wins, some big ones too. So this one really popped the Samba. So overall it's been outside of like 2 of them, which kind of, dragged down the overall results. The rest are good and, strong, like bullish runners. This one's up big, overall. So it'll be a nice quarter. We'll roll out not too many trades. I won't, maybe a trade or two left, but we'll roll out Q4 on the 18th, same day as Fed meeting. So any questions on that? Comments? No? All right. Well, I'll wrap it up for this week. We'll be back next week and do it again then. So thank you, fellows.
Thank you. Have a
Yep.
good one.
Thank you.
Yeah, thanks.